Nelson is the perfect person to start us off on delivering alpha, and he is the ultimate tone setter, I would say. And I think there's nobody better to ask about the tone right now in the market, the outlook. I mean, it's been a pretty exciting week or so since the election. He also has views on everything, so we're lucky to hear from him. But how are you thinking about the outlook right now?
Look, I've never seen so much optimism, you know. Thankfully, the election is over. Thankfully. And thankfully, it was a dramatic win. It wasn't a squeaker. We know where we stand. There's no question. We know where America stands. Trump got the popular vote. He got the Senate. He kept the House. So the ball's in his court.
Is that a good thing?
I think so. I think so.
You've been
I
a
think the
supporter.
alternative was terrible. I really do. The alternative was ridiculous. It was a woman who took no responsibility for the last 4 years. And I didn't like the way we were going anyway. You know, the ballot, look, America is #1 in the world. It's the shining light on the top of the hill, whatever the expression goes. And we've separated ourselves from whoever #2 is. But we've got issues that we have to resolve. We've got issues that we have to deal with. We've got to fix our balance sheet. We've got to get this immigration problem finally behind us. And I think Trump is going to do that. I really do. I think he's going to deal with those issues head on. I like the fact that he's putting a cabinet together right away. We're not waiting a month to pick one at a time and do all that stuff. He's got a plan. I think he's going to do a good job. I think the first 4 years were sort of practice for these, you know. So I'm very pleased. I'm very optimistic, and we've got to deal with our balance sheet.
Well, I'm glad you brought that up, because a lot of investors are talking about dealing with the balance sheet and dealing with the deficit. President-elect Trump is not talking about that, and actually bond yields have risen since he got elected, and some people are worried about the deficit and more spending and more tax cuts and a lot of what he promised on the campaign trail.
You know, Sarah, if you look, and this is an amazing statistic, if you look at the budget of 2019 compared to what we spent in 23, had we done that, had we spent what we spent in 2019, we would have a surplus. Now, that's not 20 years ago. That's 4 years ago. That's how much the spending has gone up. We can't afford to keep doing that. And that's our challenge today. I think all the other challenges are behind us. I think all the trade issues are going to, the threats of all the taxes and the duties and all that stuff, I think, and the tariffs. I think that those are just, I think that's talk, and I think that's...
Oh, really? You
Yeah,
don't think it's action?
No, I think he intends to do it, but I think our trading partners are going to change it. I mean, why should a Chevy in Paris cost over 100 grand? It shouldn't, you know. It's just our way of protecting them, you know. We beat Germany in 1945. You know, we don't have to keep making it better and better and better and better financially. We don't have to keep protecting them. So I think we've got, and I think Trump is right. Mm-hmm. I think the threat of the tariffs will bring these guys in line. I think we need that.
So it's a negotiating ploy.
I think that's what it is. I mean, I could be wrong. I don't know, but you know, that's a good way to start the negotiation. That's his style. You know, come to the table with a hammer and see what happens. And I think they're going to relent. I think they have to relent. The protective tariffs that Europe has erected and other places have erected have no place today in the world, you know. And we've got to get rid of the 10 to 15 million people, whatever that number is, who came in here illegally over the last 4 years. That was ridiculous. There are so many talented people waiting online to come into this country, people who could help us economically, help us strategically, help us scientifically, and they're waiting patiently in line, and you turn on the news and you see thousands of people walking over the Rio Grande, and down in New York, thankfully, we stopped giving them cell phones. We have illegal aliens. You come to New York, you get a cell phone, I mean, what is this? This is a joke.
I mean, it's what he campaigned on. I think he has a mandate to do that, right?
I think the cell phones have stopped.
Right. He spoke to Mayor Adams, and the money's stopped over there. So Elon Musk is going to be leading this Department of Government Efficiency with Vivek Ramaswamy. I imagine you think that's a good thing.
Oh, Elon is a friend of mine. My son Diesel and I Elon was at the house for a weekend, and we had a breakfast and invited Donald for breakfast, and they sort of reunited again, and it was...
So you're responsible for that match?
Yeah, I guess so. I hope it was good, you know. Yeah. I was a matchmaker.
I'm sure the president-elect is very grateful.
Look, that was late last spring. And since then, look, I don't know that Donald would have had this sweeping victory without Elon's help. Elon was in Pennsylvania. I thought he was going to be Dutch or something, you know.
Amish?
Yeah, Amish, right. I thought he was going to be Amish. He was there almost full time. He came to New York every now and then to say hello, but other than that, he was there. And I take my hat off to him. I mean, he got the bit in his teeth, and he wanted it to work. And if Donald gives him the opportunity, he will cut costs. And that's what we need to do. We need to cut costs. Like everybody here, you're a businessman, you've got to have your revenue be bigger than your expenses. It's really simple. We don't have that in America. Okay, that's what we got to do.
We talked a little bit about immigration. We also have other problems in this country, and one that I know is very important to you personally and me is the rise we've seen in anti-Semitism. You've spent years on the board of the Simon Wiesenthal Center trying to fight this problem, and it's explosive globally. What do we do?
I was chairman of the Wiesenthal Center for 30 years. We worked very hard, and I think we failed. Because look what we got. It was better in the 80s and the 90s than it is today. And, you know, and it's our own fault. I mean, we tried to do so nice to everybody, embrace everybody, come here, come to our colleges, become our professors. And, you know, we just think, you know, it's kumbaya, everybody loves everybody, you know, and this is what we got.
America, you're saying, it's our fault. But it's a global issue. Look what happened in Amsterdam.
Yeah, I agree. I mean, I'm trying to get one of our companies that is having something go public, one of the divisions go public, that they were registering in Holland, and I'm trying to get them not to register in Holland.
As a result of
because of
what happened.
Yeah, I mean, you know, why do we want to do that? Why would we want to ignore this stuff? I'm just finishing a book about World War II, and to see all the horrible things the Nazis did, and here we're going to let this get started all over again. It's ridiculous. You've got to come down very hard on this. You really must come down hard and obliterate it. There's no room for it. There's no room for any of this stuff in America.
Well, it's, yeah.
You can clap.
Yeah, let's clap it. Thanks. I mean, I'm glad to hear your activism on that front. So, Nelson, how are you thinking about the portfolio right now, given the changed outlook for the U.S. economy, the deregulation, the tax cuts, the tariffs, everything that comes with another Trump administration. Do you do anything differently to position?
Look, the companies that we invest in are consumer, financials without balance sheets, asset management, and the occasional industrial. I think we're not going to change the way we do things because fundamentally all those companies are international. I mean, one of our biggest positions today is Unilever. That it's listed, it's a FTSE company, it's number 3 or 4 on the FTSE, but it's an international company, you know. And I'm very proud of what happened. That was a company that was in a coma for about 10 or 20 years. And we've gotten a new chairman, a new CEO, new CFO, and a board that's about 6 or 7, where God knows how many were on the board when I got there. And our last quarter numbers were better than P&G. Sales growth was better, profit growth was better, margins were better. We spent more in advertising, and we've announced that there are 7,500 white-collar jobs that we don't need. Think about that. Running a company with 7,500 extra people, you're going to pay every week. And they're not happy either, because they want to be doing something. They just don't want to be hiding, which is what they were doing. They're hiding, that's all they do. They need to feel that they're being constructive. So we're going to help those 7,500 people feel constructive. And it will be good for both parties. And that's what happens in all these businesses, Sarah. I mean, these companies were created by founders, and they were so heavily invested. Like 300% of their net worth was tied up in the business, and nobody needed to tell them to work harder. Nobody needed to tell them to get another account, to watch the expenses, whatever. And then when these companies got successful, Procter & Gamble, Unilever, Disney, when they got successful and that founder moved on, then you wound up with a company that were not founders and a board that was put there to watch the management. I went on my first outside board in the 70s, and I think my director's fee were between $5,000 and $10,000 a year. Think about that.
What company was that? What company? Was it a food company?
Sterling Bank.
Oh.
Okay. See, I still remember that one. So at $5,000 or $10,000 a year, that's an honorarium. It's not a source of income. And our job was to make sure the CEO was doing the right job. That's what we're there for. Now roll forward today, directors at Disney can be making $300,000 to $400,000 a year. Now it's getting serious. You're on 2, 3 boards. You're retired. Nice retirement income for you. The first thing you don't want to do is upset the chairman. You want to make sure he's happy with you. So the role of the board has changed as the compensation has gone up, and then you find nobody on these boards own any stock. So they're supposed to be protecting us, but they're not in the same boat as we are. Any stock that they own was given to them. So they didn't even write a check for the stock, and here they're making $300,000, $400,000 a year, and my future is tied up with them. They don't have any skin in the game at all. They have reverse skin in the game. That's what we had at Disney. That's what we have at a lot of these places. When we got to the Disney board in the proxy fight, the entire board, including the CEO, who was making $35, $40 million a year, had in total less than $20 million of stock in total, and all but a sliver of it was given to them. That's not the way to run a railroad.
So why didn't you win that one?
Why? Because the index funds didn't want me to win. The index funds get paid a lot of money from Disney, and they didn't want me to win. But let's see what happened. I bought the stock in the mid to low 80s. And when we lost the proxy fight, within 48 hours, I sold all the stock at 119. There wasn't much of a celebration with the victory because it went back down to the 80s. And now it's getting close to 100 again because they're looking for a new CEO.
They report earnings after the bell.
Pardon me?
They're reporting earnings after the bell today.
Okay, we'll see
what do you think is going to happen there? And are you suggesting you might take another look?
Look, if the stock goes back to the 80s, you guys can. I'll be back. I promise. You can count on me.
Well, one of your core arguments, though, was that they did a bad job at succession the first time around. Now they have James Gorman running the process, former Morgan Stanley CEO, and they do seem very focused on it.
Oh, for sure. I know Gorman. He's a good man. He is going to do a great job, and he will get a respectable CEO in there. You know, what happens is the last two CEOs, Iger and Michael Eisner, I don't know what happens in that office at Disney. I think if you there for a couple of years, you think your name is Walt Disney. You change your initials. I don't know what happens. They walk around with ties, WD. I don't know what goes on there, but they all seem to think they're Walt Disney. And I knew Bob a little bit before the fight. I never saw him draw Mickey Mouse. You know, he wasn't much of a cartoonist. So we'll see what happens. I don't think. I think they'll have a new CEO before the end of 25. That's my guess.
Before the end of 25?
Yes, that's my guess.
Would be a little early.
I have no inside information, but that's my guess.
By the way, they report tomorrow morning. My mistake, not after the bell. So how did that fight stack up? We played some of the clips, Nelson's greatest hits before, with some of your other proxy fights you've done. You mentioned P&G. That was a success story. Yeah. But there were others. I mean, DuPont is one you like to talk about as well a lot.
Yeah, I lost that and won that, you know.
Lost the battle, won the war.
You know, well, first we won Heinz, which nobody thought we'd ever win. Nobody heard of me, okay. They did such a bad job that they will only take anybody to put on that board to get that company working again, and we got on the board and the company did great. And then DuPont, and you know what's interesting? Any proxy fight that we won, the CEO was never fired. Okay? So the first one we lost was DuPont. We got 46% of the vote, and they got the balance. The stock went from the 40s to the 70s. After we lost it, it went back down to the 40s. You guys, or one of you CNBC people asked me, am I going to sell our stock? I said no. When it got back to the 40s, we bought more. And the CEO made these crazy promises about the next quarter and the next quarter.
This was Ellen Kullman?
Ellen Kullman. She missed the next quarter, and then the quarter after that, she retired. And then they brought in a guy who's a buddy of mine, Ed Breen. And Ed called me up and said, I need to come visit. He came in, he said, I need you to sign a confidentiality agreement, which I did. I signed. I trust Ed. And Ed said, look, we want to merge with Dow. I need your help in doing that. I said, great. We had a meeting at my house, the CEO and the number 2 guy at Dow, who's now CEO, Jim Fingerling. Mm-hmm. And the people from DuPont. The gates were closed. We didn't let any investment bankers in the driveway. And that day we negotiated at my house what was, I think, about $100 and some odd billion merger between Dow and DuPont, and the ultimate split up into 3 companies. So the end result is our stock, when we sold it, was worth the equivalent of 117. So we work hard for our money, let me tell you, we do. And our investors are happy with our efforts. And today those businesses are better than they were when they were individual, because there were pieces of Dow that DuPont needed, same vice versa, that Dow needed, and then there were a few pieces that neither one of them needed. So we created 3 companies out of 2, and things went really well.
That's a good inside story that you can only get here, behind the scenes color. So Nelson, where's the next fight? How do you determine that?
We don't look for a fight. I want to make love, not war.
Constructive, not destructive.
I'm looking for people to embrace me, Sarah. You're the only one who's willing to talk to me in front of you.
But how do you determine whether it's worth it? Because you have been taking on bigger companies.
Well, bigger companies are safer companies. And I like the fact that they're sort of unapproachable and they're very safe, and the bigger they are, usually the worse run they are, and the more opportunity to fix things. And so that's what's attractive. I mean, you could find a little squirrely company that, you may like. It could catch cold and die, but I got to tell you, DuPont's not going to catch cold and die. Disney's not going to do that. P&G certainly isn't going to do that. I mean, P&G was an amazing battle, and it wound up happily. They fought me like crazy. They spent supposedly $100 million to keep me off the board. We won our board seat. It was the biggest proxy fight in history. And you know what happened? The stock went from the 70s to 160. And David Taylor, who was CEO during the proxy fight, and I became great buddies. You
were on stage here.
We were on stage here, and as great friends, and I was friends with all the guys I had proxy fights with, except Iger.
So you see upside in Unilever. Where else do you see the biggest upside in the portfolio right now? And I know you're thinking also about things like Gen AI and how that's going to impact some of your companies, which are not the sexy ones, like the Magnificent Seven, that get all the love around AI.
It's interesting you bring that up. And, we've seen, if we stop and look back, we've seen certain companies 25 years ago which were unassailable, Marshall Field's, Macy's, these companies they would go forever, and then they're basically gone. And then you see other companies like P&G and Unilever, who they didn't do anything so spectacular, but they stuck around because they have great brand loyalty. And whether they buy it on the internet or they go to the corner store, they're still buying, Dove shampoo. So what's happening now is, as this new technology gets more widely used, AI, for example, it only makes these old line companies better. I'm seeing that. I saw it at Wendy's, for example. At Wendy's, the drive-through, many of our drive-thrus are no longer manned by a human being. You've got AI who talks to you, and you tell him how you want your burger. And believe me, he's going to do it better than the guy who probably doesn't speak English who's there, because they're multilingual, those AI. They're really smart. They speak all these languages. And it really improves these companies. So you've got these old line companies where AI is just going to make their business better. And then you see other companies and other industries where technology has killed them. And it's really, and that to me is a very important thing as you folks decide where you're going to invest. You got to think of where technology is going to really help where technology is a threat, and it cuts both ways, and it's really interesting to see an old company like Unilever really using OpenAI, just a little bit, but it'll get better and better, and where companies like Macy's and Marshall Fields are just, they're really hurting from all this technology. So that's a challenge when you decide and think about where you're going to make your next investment.
So this is an investor conference, and everyone really just wants to know where the market's going. So Nelson, what type of macroeconomic environment and investing environment do you see? We've already had such a tremendous run-up off this Trump rally, off the Fed cutting rates. Do you think it continues?
No, I don't think it continues.
Really?
Yeah, trees don't grow to the sky. Definitely not uninterrupted. There will be something that will upset it. I think you've got euphoria from the election. On the other hand, you look at the international stocks that have got slayed over the last week or so.
Yeah, Unilever got hit.
Unilever, thank you for reminding me, you know. I thought we were on a hell of a roll there, you know. And all of a sudden people realized it was listed on the FTSE, and you can't have anything listed on the FTSE.
But the point is, you think that the market looks, what, fully valued?
Look, I think, I don't know what the market is. I mean, you've got the S&P 500, and then you've got the S&P 2025. You know, that's what it is. You've got two different markets.